Every single day, millions of people wake up, grab their card, and go about their lives. They buy coffee, they pay for groceries, they tap their phone on a reader and walk away without thinking twice. But here's something most people never stop to ask. Where does that money actually go? Not just to the coffee shop, not just to your bank, but through an invisible system that quietly makes billions every single day without you ever noticing. Today, we're gonna follow the money. And by the end of this video, you'll never look at your bank card the same way again. Let's start with something simple. You walk into a shop and buy a pair of trainers for 80 euros. You tap your card, done. Easy. But what actually happened in that split second? Behind that one tap, there are at least 4 different parties involved, and most of them just made money off your purchase. There's you, there's the shop, there's your bank, the one that issued your card, and there's the shop's bank, the one that processes their payments. Each one plays a role, and each one takes a cut. This system has a name. It's called the payment processing ecosystem, and it's one of the most profitable machines ever built. Here's where it gets interesting. When you pay with your card, the shop doesn't actually receive the full 80 euros. A small percentage is automatically taken out before the money even lands. This is called an interchange fee. It's typically between 0.2% and 2% of the transaction, depending on the card type and country. It sounds tiny, but multiply that by billions of transactions every single day, and you start to see the picture. In the European Union alone, interchange fees generate billions of euros every year. And the majority of that goes directly to the bank that issued your card, your bank. That's right. Every time you use your debit or credit card, your bank earns money. Not from you directly, from the shop. It's built into the system, and most merchants have no choice but to accept it. But interchange fees are just one piece of the puzzle. Credit cards are where banks really start to make serious money. When you use a credit card, the bank is essentially lending you money for free, but only if you pay it back in full at the end of the month. Most people don't. The average credit card interest rate sits somewhere between 20% and 30% per year. Miss one payment, carry a balance, and that debt starts compounding. The bank earns interest every single month on money you already spent. This is not an accident. Credit cards are deliberately designed to be easy to use and easy to overspend on. The more you spend, the more the bank earns, either through interchange fees on every purchase or through interest if you don't pay it off. Now, here's the part that most people find genuinely surprising. When you deposit money into your bank account, the bank doesn't just hold it there for you. It lends most of it out to other people. This is called fractional reserve banking. Banks are only required to keep a small percentage of deposits on hand at any time. The rest? They lend it out as mortgages, personal loans, and business loans, and charge interest on all of it. So your 1,000 euros sitting in a savings account might be earning you 2% interest per year, but the bank is lending it out at 5%, 10%, even 20% through different loan products. The difference between what they pay you and what they charge others is called the net interest margin, and it's one of the most reliable profit streams in the world. Beyond interest and interchange, banks have a whole toolkit of fees that quietly add up. Monthly account fees, overdraft charges, foreign transaction fees, ATM withdrawal fees, late payment penalties. Each one seems small on its own, but banks serve millions of customers. Even a €2 monthly account fee multiplied across 5 million customers is 10 million euros a month just for the privilege of holding your money. And here's the uncomfortable truth. Most of us pay these fees without ever really questioning them because we've been taught to think of banking as a utility, a neutral service, something that just exists. But banking is a business, one of the most profitable businesses on earth. And understanding how it works is the first step to making smarter decisions with your money.
So what can you actually do with this information? A few things.
First, pay off your credit card in full every month. Don't give the bank interest on money you've already spent. Use the card for the rewards and the convenience, then clear the balance.
Second, compare accounts. Many online banks and challenger banks now offer zero-fee accounts with better interest rates on savings. The traditional high street bank is no longer your only option.
Third, understand that every financial product you use has a cost, even if you can't see it. Knowing where that cost lives helps you make better choices.
The system isn't going anywhere. Banks will keep earning from every tap, every swipe, every loan. But now you understand how it works, and that changes everything.